Hi, this is Maximus Analysis here for August 7th, 2015 at the close, 4 p.m. We see that the ES has held the 200-day moving average, but I would not be going long here because you don't know how many days you're going to get to the upside. Okay, you see that it basically flooded down, but came back at it went sideways and then basically closed up, but did not take previous highs. But you see that the bears did get a good bounce into the close. But the thing that we discussed yesterday was that we knew that there's weekly put options that probably were bought heavy yesterday that they basically crushed for some profits, some easy profits. And again, if they want to see up, you want to make sure you're not caught in a dead cat bounce if we get up to this region and continue down. Again, over 2092 would be something that you would say, okay, now we got to see what's going on, but not until we get a close above 2115 a couple times would I consider looking for them to take out new highs. So again, we're right at the cusp right now, and they've broken support. Now it's resistance. So again, that 2080 area is still being respected. And below, if it breaks down below, it could get down in a flush below this 36. You're looking at 1974 is where it could go down to. So just keep those numbers in your mind. Now the YM is in a lot worse shape than you see. And again, they used everything to get American Express to basically keep this name up to make it not look as bad as it actually is, because this one is below the 200-day moving average. And if you have 1 or 2 days up, it could continue to the downside so fast because this churn has to get through. 17,870 would be the number that we would look at to see what's going on regarding that name. Now we have the NQ. Again, the NQ, a lot of the names need to be held. Again, it's still in there, but it's back where we wouldn't want it to be. We want it to layer above, but it's fine right now. Again, as long as it doesn't break this 4,500 level with some conviction. But I still think that there's some pullback that needs to be done for a lot of these tech names. And the IWM continued to be down. Again, they might pop this one up, but this is definitely the sell signal was good and it's continued to be good. Now it's under the 200-day moving average. We have crude. Crude continues its downtrend, and there's really nothing to there's no reason that you should be looking to try to get into this name. I don't know what the hell is going on my charts here, but again, there's no reason to try to get long this right here right now. Again, until they break above this 56, all rips will be shorted into, and it could go to 43. Excuse me, yes, well, it's already at 43, for goodness sake. It could go to 37 and then to 33 eventually, and that's not an unrealistic thing, because again, if they give you some pullbacks, even if they gave you something similar to this, right? Let's say they give you something similar to this, that only brings you up to about this 60 range, and they can continue to the downside. Now, it won't be a couple candles, but still keep these things in mind. And if they only give you something like this, okay, which was a healthy retracement, let's really look and break this one down, by the way. So let's look at the percentage just to kind of make sure that we kind of know what we got going on. So again, a 20% correction still puts you only at about this gap and below these lows. Now it depends how quickly it happens, but again, I would still be bearish based on the weekly time frame. Again, I posted something on Twitter regarding this name, and again, we'll look at it again. Just look at the weekly and you'll see that it's broken down in a significant way. Now, American Express, they threw the kitchen sink, and that's what basically kept the Dow from really crushing to the downside. And again, bonds did shoot up today, so again, they're continuing to look up, and I don't know if that means that people are moving into bonds out of equities. You can see that Disney, again, this is going to take this is not going to happen to just V bottom right back up. I know that, again, you have to make sure that you're looking at some higher time frames if you're looking to just take this as an investment. But if you're not, let's look at about $8 off this low around here that they need to recapture in a worse way, because again, they took out 9 weeks of data in one. So you got that still in a weak state. And again, if it dead cat bounces on a swing trading side, if it dead cat bounces, it could could easily go back down. You got price line. Again, that one pulled back pretty hard today, but it needs to just hold this 1300 level. Holds this 1300 level, it looks okay. Again, that would bring it back to these levels though, however. So if it doesn't break that and you get a sell signal, which is under 12.25, you could see that that would not be good, because again, it could be running out momentum and then continue. And again, of course, breaking 1100, and you could see it come back to the downside. So just be aware that this other high is in place around here, and they went to it and failed. So we got to see really how this one plays out over the next couple weeks. Now you have Tesla. Still looking in a weak situation. Again, dead cat bounce up to this area, could be shorted. And also remember, same thing on the weekly time frame, that you do have these highs right here. Again, I don't look at head and shoulder patterns, but again, I look at the the lower high coming from this area. So let me take all this stuff off, and you can kind of really get to see what I'm talking about here. So you have this lower high from here, and again, if it continues to the downside, this would not be good. I don't wait for necklines. I would short right here and put my stop above here. But again, we want to see how this one reacts based on based on how much energy we have to the upside. If this bounce, it bounces all the way up to this previous resistance level based on price bottoms, it would be looking more to the short side of things. Okay, you have gold continuing to go down. Again, I would not be looking to long this just because I don't play that, guessing the bottom. I'd rather put my money where, I'd rather go with a downtrend, uptrended stock that I go long. And Netflix still looks okay. Again, it's still looking okay. Baidu looks like it could, again, this gap, people see this gap and get scared. Again, it's based on China. So let's look at what this China thing is. I'm using the FXI here. And again, this is really gappy, but let's break it to a weekly time frame. And you can see that if we really look at things, okay, you can see that this is broken. It needs to get above that 45.17 level. If it doesn't, then it could be something, they could be, really setting themselves up for a world of hurt. And again, China has its issues where, I've heard about this China bubble for a long time, and these ghost cities, which are now, ghost cities, basically they're building, China keeps their, they basically have a housing boom, and Chinese people are buying basically how people were buying Florida pre-construction and all that. Same kind of concept, but there's cities, literally cities as big as Chicago and, Charlotte, and all these other, nothing like Manhattan, but they're getting close, that are completely vacant. So that's a false sense of growth and a false way of looking at real estate growth. So again, if they pop back up to the 48 area, that would be actually, they still got more downside to go. So keep that China information in front of you. Again, I would never trade this chart that's so gappy, but you can kind of see that, again, on that weekly, that we're at some critical levels here that people need to be aware of. So again, this week, we had some fireworks. We definitely have been talking about 4 weeks, if you've been watching the channel, about the 2080 area, and it got below it. Again, we want to see what kind of bounce they give us, and if they give us more downside flushing, we could see that 1974 area if we break 2035 area. Take care.